All right, so I guess we're into week 7. Big news is not in this video, separate video, but the midterm prep video will be coming along. Um, so we're getting close to the first exam, and then you're off into spring break. So tonight we're going to talk about auto and homeowners insurance. We're also going to talk about some aspects of medical insurance. Medical insurance is super frustrating because there's just not any good programs, or at least not the government programs, and there's a ton of, I don't want to say bad information, let's just say it becomes very political and people end up on different sides for no real reason. Background on insurance. Why do you have insurance? It's to protect what you've got, right? And then also, there's a legal requirement in terms of auto insurance. There's a concept of liability. If you hurt somebody else's stuff, or somebody else personally, injure them, you're going to be held responsible. So they're actually, and sometimes I get students who follow up with me on this, but there is a way that you can actually not have any type of auto insurance. You can post a bond instead, and it's completely legitimate. What happens is you have to prove basically to the government that in this case the state of Alaska, that you could cover your debts out of pocket. So if you injure somebody and they have $100,000 worth of medical issues because of you, you could pay for that yourself. And anyway, that's how the state of Alaska actually does it. I mean, the state as an entity, they don't have, they're not insured with State Farm or Geico or whoever. They're self-insured. They handle their own insurance. And if you've got deep pockets, maybe that's a way to do it. For most people, that's just not reasonable. They would rather have somebody else pay somebody a premium and have them accept that risk. And the way insurance works is that not everybody is going to have a bad day on the same day. That's the concept. That's why flood insurance, for example, when we're talking that kind of stuff, homeowners insurance, it doesn't work because everybody can have a bad day because everybody in a flood zone can't get flooded at the same time. So that's just not a viable business concept. Well, it's a great business concept if you're shifty, because what you do is you take everybody's premium, and then when the big flood hits, the 100-year flood, well, you just hope it doesn't happen, but you as a company, you just declare bankruptcy and walk away, declare you're insolvent, and the insured people get nothing, and the government's on the hook, and so that's why flood insurance is not a private program. It can't be offered by private companies. It can be administered by some intermediary private company, but it's a federal flood insurance program, and it's pricey too. But anyway, we're getting off topic. Right now we're going to talk about just insurance in general, and so again, liability is a concept that you're responsible for the damages to somebody else. Largely, the government, the state, the whoever, doesn't care what happens to your own property. If you choose not to insure it, that's your business. Now, if it's your home, if you got a loan on it, it's not really your home. So, you do have to maintain insurance on that, typically as a part of the loan. And if you don't have insurance, you're gonna have issues. So that's why they typically want it in an escrow account so that it's paid for, and they make sure that they're taken care of. So risk is the exposure. Perils are those dangers out there. Perils are fire, wind, whatever, hail, different things. Risk management, how to protect from risk. So you can try to avoid risk, but that's difficult to do. You can avoid risk altogether by not driving, but that would probably entail some risk itself. You're going to probably be suicidal or something. It's just you can't necessarily avoid risk altogether. Reduce risk, you can do that. You can mitigate it. You can do different different items. So these things sort of run together, or accept risk or insure against risk. And so, having somebody else assume this kind of worst case scenario is usually pretty good. You generally don't want kind of the gold plated insurance, because it's probably not going to be a good economic proposition. But say health insurance when you're young is catastrophic insurance is quite good value, because you're essentially brand new. You don't have that many turn everything into cars here, but that many miles on you. Your chance of having some, it literally would be a freakish death. People don't die of natural causes in their 20s and their 30s, so it gets considerably more expensive as you get older. And the same is true of everything. So anyway, premium is that amount that you pay to have somebody else accept that risk, to insure against that risk. Economic coverage. Yeah, they always want to address that, but it sometimes it may be more prudent to have the insurance. For example, I keep going back to this situation I had with the Dodge Viper. I knew the insurance was going to be exceedingly expensive when I got it, but just the combination of being in Europe, it was going to be, I want to say it was $18,000 per year for insurance. Well, I don't need that. The car is worth about $30,000, so every 2 years I could have bought a new Viper, and so not a new one, but a used one in similar condition. So I took them up on that bargain. And actually, it worked out. I mean, because I probably was more cautious, but I did take the thing on, on the Nürburgring, on the Autobahn, and all that. In fact, I even got a free trip to Maranello, where they make the Ferraris, the Ferrari dealer in Saarbrücken, because I was the only person he ever met who hadn't crashed the Viper. He was pretty impressed. It was I came close once or twice, but I never actually did it in. So anyway. Types of insurance. So, property, casualty, life insurance, health insurance. We'll address a few of those tonight. Insurance companies and premiums. So companies are out there and for a premium, and they've got people that are actuaries, and then people that just focus on statistics, and they know pretty much based on a number of factors how many accidents are going to occur, when people are going to die, when people are going to have health conditions, how much these things cost, and they adjust the premiums accordingly so that they can make a bit of money, take in more money than they pay out. Different types of insurance. So common events. So like I say, liability insurance, you can have what they call liability only, which means that your vehicle's not covered if it's your fault. Now, if you have collision means that your vehicle is covered even though it is your fault. But collision is kind of expensive. So if you've got an older vehicle, or if you're, willing to accept a little bit of risk and be a little careful, you can opt out of having collision and save some money, at least in the short run. And I've done this on a few times, and it's a little dicey in Alaska. I crashed one of my 4Runners one time, and I was out about $3,000. That was what the value of it was then. It's probably worth more now, actually. But anyway, that's what I claimed on my taxes. I wrote it off as a loss, so it wasn't a total. Well, it was a total loss, but I did, get a portion of it back by listing it legitimately as a loss. So medical bills, homeowners insurance, medical stuff, disability stuff, and then life insurance. So, like I say, there's a lot more to it. We're not going to get through like life insurance and stuff tonight, but we'll talk about some other aspects. Role of insurance brokers. I prefer not to have an agent. To tell you the truth, I prefer to go online. There's a particular company that I will not mention by name, but they're always in my chili, creeping around, taking pictures of the home, looking at stuff, and I'd rather have some online entity that just takes my premiums and fixes stuff when it's broke, and I don't need another personal relationship with an agent, especially one on commission. But each to his own. Um, so yeah, captive, independent. Again, I think all this stuff is going to go the way of bank tellers and travel agents. Sometimes they're needed in special instances, but for the most part, a lot of that stuff is just done online, and rates are compared across the board, and service. I've actually gone with some specialty companies. There's a company called Haggerty that insures. I had a Corvette that I crashed a couple years ago, and man, they were great and cheap rates, and even my Forerunner shows you the years of the vehicles I have. They considered it a classic, a good autumn. And so the insurance is quite cheap on that. And then I have a normal insurance company, and then I have a business insurance company, and it's just more hassle than it needs to be. But hopefully your life is a little simpler. And if I had just a simple online insurance company, that would be my best case scenario. But up to you. Why is it so expensive? Personal injury lawyers. I had the occasion, and I met these guys down in Anchorage who were like some of the best. But they were helping me out with a business project because they were just so bored with their personal injury stuff. But they said they just couldn't step away from it because it paid so well. And I do some things with some of the stuff was with horses, and perhaps sponsoring some events where alcohol would be involved, and they were just, they said, yeah, we will find you liable for everything, and you will be sued to the bejesus. And they were the best in the business, and that's what they do, and they were honest about it. So anyway, that's why rates are what they are. Quite expensive. Auto insurance provisions. So contract between you and the policyholder, or the company and the policyholder, and you obviously it's going to identify the vehicle by the vehicle identification number and the drivers, and I think just about all of us are familiar how that works. So bodily injury. So that's the medical stuff, and that's where things get quite expensive. Property damage, that's also other things. Keep in mind too, if you get in a pretty good bender, like I did with the Corvette, I took out some guardrail, and they said I was going 48 miles an hour when I actually hit the guardrail, which was, or actually 60 at one was estimate. But anyway, nothing came of it. But I know other people have been charged by the foot for that guardrail and other structures that you might hit. So keep in mind that's all on you. You're liable for that. The way they quote these numbers, there's always a series of 3 separate numbers, and so the first one's the per person injury. Second one is the medical combined, and then the third one's property damage. So these numbers are pretty low, especially the property damage. Well, any of them are quite low. You can get in some you can exceed these numbers. So again, if you're getting a very low rate, you may want to see what the numbers are behind them to make sure you have some protection. And you'll see that each state has an absolute minimum, but they're pretty minimal. You can see, we'll look at them in a second, where you can see that you could be on the hook for quite a bit of money if those numbers are exceeded. So if your insurance doesn't cover it, then it just falls back onto you. So, and I've talked about that in terms of there is a law, whether it's enforced very well, some states not very well at all. Some states it's over the top. I mean, every time you go to register your vehicle, or if you happen to like in Germany, I remember they would cancel your registration if there was any lapse with the insurance. And what they interpreted as a lapse was just, some sort of billing snafu, or you switch companies and you get a letter in the mail saying your registration is canceled. I haven't seen that so much in the States, at least not in the state of Alaska, but I would imagine that would happen pretty quickly. So medical coverage, we talked about that. And here's the different limits. So, Lake Arizona, 10 grand, 5 grand in California, which seems very odd. I mean, anyway, vehicles are, even the cars I drive are worth more than 5 grand. So the numbers go up. But so the minimums are typically, you're going to go a little bit higher than the minimums. And then the uninsured, underinsured motorist type things. It's crazy. I had a pig hit a couple years ago. Petunia got clobbered by a Toyota Tacoma. It was a long story, but I wasn't actually there. The dog catchers had corralled her, not very well, obviously. She ended up on the highway, and that went on that actually went on my homeowner's policy, strangely enough. But anyway, they found me liable, or at least vicarious liability, for a pig I owned. She was an 800-pounder. Clocked her right in the head, though. So she still went in the freezer. It was just fine. Deductible. So deductible is another way where you can. I'm not saying go without collision, and I'm not saying go with a super high deductible, but these are things that are worth exploring if you're looking at ways to get your premium down. If you went with, say, $1,000 deductible, that's going to reduce your monthly premium, or your whatever annual premium, by quite a bit. I actually had a $1,000 deductible and had a claim on a vehicle, and it was the most curious conversation, because the insurance company, which was a great company, she said, "Did you really want a $1,000 deductible?" I go, "Well, in retrospect, no, probably not." And she goes, "Why don't we just adjust that?" That was a one-time good deal. I wouldn't expect that kind of luck. But anyway, I knew when I signed up for the $1,000 deductible, I was on the hook for the first $1,000. And then, so if the car has, $5,000-$10,000 worth of damage, you're expected, you will come up with $1,000, and then they will cover the rest of it. So, yep, expenses incurred by auto insurance. So yeah, there are other fees and other things involved. So different provisions. So we talked about liability. Now we talked about damage to your own car. When it's your fault, that's collision. So if somebody else hits you, it's going to come upon their liability policy. Hopefully your insurance company's not even involved. But if you're the one at fault, your insurance company will pay for their vehicle, but your own vehicle, if you opted not to have collision, you're on the hook for that. So bodily injury, property damage, and then comprehensive. Comprehensive is the one that, and there's kind of gray areas depending on how your vehicle is set up, and there's all sorts of exclusions, like aftermarket car stereos, you may find out, are not insured. I had a real unfortunate thing. I had a beautiful, an old K5 Blazer, a 72 Chevy. Anyway, meaning nothing to some folks, but to me it was quite a vehicle. So I went overseas. I was going to be in Turkey for about 6 months. Well, it ended up being 9 years. I was in Europe all told that time, and I'd parked the vehicle in a special lot and had it semi-stored, but I'd taken the nice wheels and tires off of the truck and put them in the back, and I thought I was doing a good thing because I didn't want them to get all weathered. But since I had removed them from the vehicle and put on these little beater wheels, the wheels that were not connected to the truck were not insured. And anyway, it was a total screw job. Characteristics of your car, so the value of the car can affect the insurance that you're going to have to pay on it. Repair record, if the parts are quite expensive. But also, performance vehicles and things like that. The characteristics of that car. And I remember at the time there were 43 different categories in terms of least expensive to insure, like maybe, probably a pickup probably would not be that cheap because people use them for strange things, but, maybe a station wagon would be, number one in terms of lowest insurance. And sure enough, the Viper was number 43 out of 43 because it had I guess it was a V10, V12, I can't even remember now. But no anti-lock brakes, no driver traction assist, none of that stuff. Just all power, no prevention. And plus it was driven by idiots, especially here in the States. So personal characteristics, so yeah, your age, your mileage, your driving record will also affect. And males are also more expensive. It's not that these people are mean, they're just looking at the numbers. And actually if your age gets to be too old, because some of the really older folks will get in more accidents again. So it goes down for a while and then it peaks back up towards the end of your life. Your location, driver's training, sometimes you can take an extra course or two, school performance if you're younger. But anyway, yeah, several quotations. And again, this is sort of like the banking example that we talked about before, where things change. Companies, it's not always the big advertising companies that say they'll save you whatever percent. I mean, when you see their airplanes flying around all summer long, somebody's paying for that. When they've got commercials, on the Super Bowl and everything else, somebody's paying for that. So there's more to it. Anyway, look at the rates. Again, different states, they're showing these older rates, and yeah, there's a lot that goes into it. And obviously some of it has to do with lawsuits and things like that. You expect California perhaps to be a little higher in that regard, but anyway, and other states that don't allow some of the personal injury things. But again, the data's kind of dated now. All right, so that was property or auto insurance that we're talking about. So there you do have some flexibility. It is something that responsibly you should have, and makes good financial sense to have it because you're spreading out the risk. Homeowners insurance, again, most people do have a mortgage, and so there is a requirement typically to have homeowners insurance regardless. It's also a good idea. Fire to burglary. And again, they're going to evaluate the home. They're going to look at things. They really don't like wood stoves. And they don't like certain types of roofs. And they don't like certain things. They do like burglar alarms. They like, different theft type things. And they like better neighborhoods. And they may actually come out the first time when you're insuring, or they'll hire a third party to do it, to come out and look at the exterior of the home, and they want to know how far away from the nearest fire station you are, and if you're in some place with wildfires, how far you away from brush and things like that you are. So there's a lot to it. Different things so we talked about some of the perils, right? Lightning, fires, riots. You don't want anything that you want all perils. You want to be covered. You don't care how it happened, and you don't want to argue whether it was the wind or the hail or which one did it. It gets kind of dangerous because then they're looking for ways not to perhaps pay. So you want all perils. And another thing you want is replacement cost. There's a lot of times where say your TV and TV especially, any kind of technology, what you think it's worth and what it may cost to get it replaced versus what they say it's worth are different things. If you don't have replacement cost, you're looking at a depreciated rate. So you've got some whatever $700,000 nice screen, and they may say, yeah, the it's 2 years old. The value of that now it's getting semi-obsolete. We'll give you $300, $200, and you're kind of stuck. So always check and see what it gets, what you need for replacement cost. So cash value is the other part with depreciation. Alrighty. Other structures. If you look at the property line on my particular property here, I've got it split into 3 parcels, but I have a property line because I split it myself, and I put this property line to exclude my shop because it was kind of a scary building. Actually, I get quite a bit of use out of it, but I did not want the insurance companies, the mortgage company, anybody else looking at that shop, because the people who were selling it were, saying it was going to crumble down at some point. I've since strengthened it up and put in some more steel and stuff. But anyway, yeah, they always, when they look at my homeowner's policy, they always want to know about this other structure that's right next door that I don't have coverage for. And it's like, yeah, it's none of your business. It is not on the parcel that you're insuring. And then they always come back and say, oh, okay. But anyway, personal property, like I say, things can get stolen. The other thing with home inventory, especially in the days of digital photography, and actually, video is better because you can just get so much information. You can establish the inventory of the home. So if the home were a total loss and it's burned to the ground, you can go back and reestablish what you had inside of it with the video. A couple things about that too are, one, that if you have some really expensive items, especially in a particular category, like a lot of jewelry, a lot of guns, a lot of photography equipment, and you think it's going to be covered under your homeowner's insurance policy, you may want to double check. Usually there's a caveat on there where, jewelry is covered up to a maximum of $3,000 or something, some sort of language in there. And if the case is that you have more in a particular category, then you need to get some sort of addendum to the insurance policy. So they may call it a contract rider, they may call it an addendum, there's a codicil. Anyway, different legal terms, but the gist of it is, if you've got something of value in a particular category, don't just assume it's going to be covered under your general homeowner's policy, because it's probably not. The other thing too is that I've had these guys come to me and say, oh, you're underinsured, your home's worth, say what, $400,000 or something like that, and you only have $300,000 worth of insurance, so you need to get more insurance, you need to give us more money to insure the full value of your home. And it's a scam, because the land is not going anywhere. The structure is what is insured, right? The value of the land is worth something. Now again, if your home is destroyed, there may have to be some demolition done to haul it off, so it may actually be worth a negative amount there for a little bit. But just the same, you need the reconstruction cost. You don't need to buy the whole, property and home again. The dirt is going to be just fine after the fire. Replacement cost, we talked about that. Here we're calling it a floater, an extension that will itemize some of your valuables. Home office provision, if that's a thing. So liability. There's different types of liability. There's general liability. Like, for example, you know, getting back to my pigs, if my pigs were out on the highway every day and nobody was hurt in this case other than poor Petunia, but anyway, and she was destined to be slaughtered. The slaughterhouse had been closed. It's a long involved thing. She shouldn't have been here right now anyway. But anyway, if I was known to be careless, negligent is the legal term, then those personal injury guys could really jump on that. They could sink their teeth into that pretty hard because I was considered negligent. So where this applies in homeowner stuff is obviously if you've got pigs that are, that's kind of extreme. But let's say you've got a swimming pool, if you're somebody in Alaska that had a pool and you didn't have a fence around it, or if you've got, lawn tools like rakes buried out there in the snow that people may just stumble upon, you may find yourself considered negligent, and so your liability, the damages to that person who's injured could be worse. Be careful about that. Also, your little, if you haven't, well, let's stick with the pig. I'm not going to address anybody's children here, but, let's go back to children. Let's say you have a child that's like 15, 16, and they put up a big thing on Facebook about having a party at somebody's house, a vacant house in this case, and they go in there, they all destroy this house. Well, it's not. I didn't do it. Well, yeah, there's a thing called vicarious liability where because that child was a minor under your care, you're on the hook. So anyway, there's all sorts of different liabilities. And other things, getting back to more vanilla stuff, if your house did burn down, you're going to be in a hotel for a little while. Maybe you're going to lose the use of certain things. It's going to be more expensive because, you're going to be having to eat out in restaurants all the time. You want a lot of those things to be covered if possible. So factors affecting it, value of the home, the deductible. Again, you can adjust deductibles. Location, and usually it applies in fire, but it may apply in theft. Degree of protection, they're going to ask you all sorts of questions. The time to have all your smoke alarms and everything else in place is before you get that insurance quote. And then discounts. If you do all your business with a single company, a lot of times they'll, if you have your auto and your home insured with the same company, but it all depends. So Tornado Alley here in Oklahoma, a little higher. Idaho, not a lot of those kind of storms coming through. Florida, hurricanes. Texas, all kinds of stuff, but hurricanes as well. So that's a lot of times what that has to deal with. Strategies to reduce. So increase the deductible, improve the protection, use one insured to take advantage of those discounts if it's good. Same insurance company, a lot of times if you stay with them. But again, don't be afraid to shop around, look and make sure and perhaps switch everything to that new company. I just switched carriers because I was just so irritated by this other company. And they pulled some funny, whatever. I don't want to get into it, but they were a local company with an agent and the worst. Renter's insurance. A lot of times you'll have to have renter's insurance because the landlord's interested in that liability protection. But also, if you're a renter, it's not very expensive, and it does protect your possessions. So, umbrella policy, supplement that provides personal insurance. You don't have to be that wealthy. I have one of our personal liability policy, and it's relatively affordable, and it's because you really don't want to get splitting hairs where, you're covered for this, you're covered for that. You don't see it so much anymore, but they probably still exist. Companies that will offer you cancer insurance. If you happen to die of this one type of cancer, you're covered. You don't want that. You want the more general policy. You want all perils. So, So that's kind of, we talked about vehicle and home. Um, we'll come back to it if there's anything else. And also in the midterm review, we'll talk about some of the items may come up, specifics on the test, but it's not going to be a big deal. Again, the test is going to be pretty straightforward, and I'll give you the broad parameters here at the end. Health and disability insurance. So big deal with health insurance is get it through your employer, which is where most people get it. So that's why, when they talk about, oh, are we going to have the Affordable Care, the world, the nation is not, thankfully, completely defended. This could be called Obamacare, could be called different things, because not everybody, only less than 10%, or no, I'm sorry, less than 3% are actually involved in that program. A lot of times people, because of Affordable Care Act, it can be quite expensive. People may be applying for Affordable Care Act but can't actually afford it, and may actually realize that they're in a Medicaid situation. Medicaid, Medicare. Medicaid is and this is for children, for CHIP, but this is more of a welfare type situation, welfare medical insurance. Medicare is for people age 65, but the preponderance of people are get their insurance through their employer. Now this, they're going to go, oh, this is horrible. There's 9% that are uninsured. And not everybody that's uninsured is, the ultra poor. There are a number of people who are just like, I don't want any of this. I would rather pay, fee for cash, if you're quite wealthy, to be able to avoid this whole program is a luxury of being wealthy, and they don't pay that much actually when they go to the doctor, because they come in there and say I'm a cash payer, and all of a sudden the rates are considerably lower because the doctor, the hospital knows they're actually going to get paid. If you file a claim using Medicare, Medicaid, the VA, whoever, with the hospital, they're not going to get the full amount. I mean, the government does not pay the full sticker price. So if you are in a situation where you're forced to pay cash, or you want to pay cash, you make that known, and there's a whole different rate schedule. I'm not in that league, but anyway, it's not, and I'm not saying all these people that are uninsured are in that thing, but there's a few percent that are, have the means to not do it. So, health insurance, private insurance companies, or the government. Yep. Critical component. Yeah, this is where, if you trace bankruptcies down, this is what causes a lot of bankruptcies. Because, again, people may get into trouble overdoing it with, luxury items and yachts, and, well, not yachts, but boats and, vehicles and stuff like that. But that's kind of irresponsible. But plenty of responsible people get in trouble with health insurance because, if it's your child and or you yourself or your spouse, and if it means the difference between life and declaring bankruptcy, most people go with bankruptcy every time. So, background on health insurance. Yep. So, many options available. 1 in 5 workers is uninsured, is what they're saying, and that's more prevalent in a gig kind of economy. Employers have found that having lavish benefits will attract some employees, but most employees are attracted by a higher salary. So, contents of policy, so identification, pre-existing conditions. So this is pre-existing conditions, and I'm not trying to alienate people here, but insurance and pre-existing conditions. These two, one of these does not belong with the other. You cannot have a concept you're calling insurance and then have a pre-existing condition. I'm not saying pre-existing conditions don't exist, but I'm saying that's not insurance. You cannot. It falls under a provision that perhaps is a governmental responsibility or a welfare type thing or something, maybe a less pejorative term. But to say that that's insurance is wrong. I mean, you can't go to a automobile insurance company and say, yeah, I want to insure my vehicle for, in case it gets in an accident. And oh, by the way, it's already been in an accident. They're going to, wait a minute, you should have had the insurance before you had the accident. Or you can't, go to get homeowners insurance, to get insurance against fire when the house is already burnt down. So, again, health care and insurance is just a weird concept because the concept of pre-existing conditions. So, that's why it's so difficult to do it. And when they come, especially when the government tries to have programs that are funded by the policyholders, when a component of that pool of the insured people have already got significant pre-existing conditions, means that it doesn't fit within the definition of insurance. So again, that's why, but politicians from either side love to fight about this stuff. And so the current system we have now, that's supposed to catch this stuff, the Affordable Care Act, the Obamacare stuff, it serves really no one well. And that's almost by design, because one side wants all private, the other side wants all government, and every election they've got an issue to drag up and pit people against each other. And the people that are fighting against one another are ideal voters. So don't expect that to go away. Pregnancy, don't even get involved in pre-existing conditions. I'm not going there, but there are unique requirements. Dental insurance, typically on dental and vision, are typically not covered under normal medical insurance, but most of them can be fairly affordable. There are some dental things that can really get out of control, but especially on the vision side, because it's a much more competitive marketplace. It's the value you get, especially for some of like the laser correction surgery, is phenomenal compared to other medical procedures. So there is something to be said about the market and the competitive nature of that fighting it out. But anyway, we're not going to spend a lot of time on healthcare insurance because there's just not a lot to talk about, because everything is kind of in flux. It's just not a good situation. But definitely a consideration when you're, entering the job pool is, does the employer have medical insurance? And that should be considered pretty high on your list in terms of perks, even to the point of perhaps sacrificing a little bit of salary to get, legitimate benefits. Anyway, yep, other coverage, rehabilitation, mental health, even more so now. So, cancellation, renewability options. A lot of things go into this, but the pre-existing condition and related to that is the DNA testing. Your DNA information, you should be safeguarding that with everything you have, because if a medical company, an insurance company, can get access to that and run a scan to find out what you're susceptible to, that would be very valuable information to them, and it would not be used for your benefit. Maybe you've got great genes and great, DNA, great whatever, but if that's not the case, it will certainly be used against you. So, other things about unreimbursed medical expenses, so the deductible, as we talked about, and when we talk about so this is amount just like on a car, the amount you have to pay. Co-insurance, yeah, sometimes you have multiple insurance type things, and they just want to fight amongst each other. I had double medical insurance there for a while, and it was a nightmare. I counted, I got 54 pieces of mail on one fairly simple procedure because each one wanted to pay the other. stop loss provisions, where they're going to stop coverage, cover limitations, and the benefits. So, um, yeah, there are some medical savings accounts. There are some other aspects, but again, there's this concept of insurance. Insurance providers offer lower rates under group policies. So that's why employer provided insurance is such, the kind of the preferred method in my mind, because they can negotiate and get better rates. If you go individually trying to establish medical insurance, um, and it's a two-edged sword. I know my brother, he should have retired a few years ago, but he just mentioned he's continuing on because he wants to keep the insurance for his wife. I mean, essentially you're job locked because you can't afford to go without the insurance. So, not a great situation for a lot of people. Medicare, so this is above 65. Different things, but most of you are so far out from it, I'm not going to waste a lot of your time. Medigap, yeah, again, this is not the demographic where we're going to spend a lot of time, but, little private augmentations to Medicare. Prescription Drug Act. Medicaid. Now, this is for aged, blind, disabled, and then needy families with dependent children. So, need to be administered. It's done by the state with federal money. Affordable Care Act. So, 2010 should have been modified by now, should have been enhanced. Not a lot to it. Remains a contentious, and again, the cynical part of me would say by design. Long-term insurance. So this is nursing home type stuff. Could be quite expensive. And it gets more expensive the older you get. And again, if you've got, some sort of thing in your family, might be something you want to think about. Not a great gig, though. Long term, there are better options now sometimes, in-home care or other types of care. But I know one fact that really stuck out in my mind in COVID was they were talking about the number of deaths in the nursing homes. Well, it was pretty grim, but even more grim, though, was on their best day, pre-COVID, there's the stat, and I believe it's still valid, is that, and we're talking before COVID, that 50% of the people admitted to a nursing home pass away within 6 months. So it's, that's, I don't know that I'd call that long term. That's more midterm. Or you could be in a situation where you're going to be creeping on for forever. Me, I think I'm going to Mexico or Philippines or somewhere. I'm sit on the beach and have somebody, nice climate, drink margaritas till things go their way. Long-term care provisions. Yep. Anyway, it's quite expensive. Quite depressing. But if you've been exposed to that, there are policies out there that you might be affordable when you're younger, would get prohibitively expensive if you're older, and all of a sudden that becomes a necessity. Yep. There are some, positive things in this now where people say you need a full-time caregiver and it happens to be somebody in your family. There are provisions where that could actually, that person who's providing that care could actually maybe receive some reimbursement or compensation, since they are performing a valuable service that if they weren't there to do it, that would have to be paid for by some other agency or insurance or the government even. Let me see what happened there. Nope, we did that one. And it rolled back on me. My apologies. So, yep. Yep. Disability insurance. Yeah, this is so let's say you're on the job working and you get hurt, or it can be off the job as well, but workman's compensation is one, and then there's another private insurance type thing. Um, and let's say, you're a roofer and you fall off the roof, and, well, you're not going to be doing that anymore due to some disability. There can be one policy that says, okay, you're not qualified to be a roofer anymore, we're going to start paying. Or it can be the other policy that says, well, learn to code. You can't go up on the roof anymore, but you can be a computer programmer, or you can do something else. So, sources of disability insurance. So, employers, Social Security. This is one of the reasons why Social Security is going broke, though, because of disability insurance, and it's a legitimate. But anyway, to be funded under Social Security it's such a drain. I'm not saying the government's not responsible for it, but to put it on Social Security means that is going to drive Social Security to be insolvent. And then workman's compensation, part of your salary, part of your withholdings each month does help to pay for that. If you are injured on the job, make sure it's documented, because it's a different set of provisions, and you want to have that noted. Disability insurance provisions. So, yeah, different ways. Percentage of the income. It's not going to be the full income typically. Whoops. God, the mouse is screwing up tonight. Yep. So I actually had a private disability insurance type thing, and I was going to be out of work for about 6 weeks or so. I found the company was just, it wasn't worth the dime I gave them. They were horrible. And just, anyway, so you really need to research the companies. The company I was working for claimed to be, top of their field. But when I went to look at the policy and I started getting some, pretty poor service from the company, I looked at some of the reviews and they were rated the worst nationwide, and it was more or less a scam. So make sure, just because you say you're going to get some private disability insurance, it's like anything else. You got to do a little bit of research and due diligence to make sure it's good. So on a separate video that I'll put out here in the next few days, I'll discuss the midterm exam. But the overall outline for the exam, it's going to be on Blackboard. So we're not doing the Proctor or the RP Now system, seems to be a bit broken. But for the midterm, it's just going to be 40 questions, multiple choice, 60-minute time limit. So it's not open book, and that would be difficult for you to do, because 40 questions, if you're having to look everything up over 60 minutes, you're probably not going to pull that off. Watch the review video, the video I'm going to put out, and yeah, you can use a calculator, but don't worry, there's not going to be formulas. There's, present value of a dollar and things like that. There's not going to be there's not going to be any of that on there. Not much in the way of math at all. So don't be too stressed about it. But I'll go through more details on that on the exam. This lecture was probably a little short tonight, just because the health insurance, there's, I can't really go into a whole lot of details. It's still almost an hour, but because I can't make excuses for a system that's just not up to speed and can be so expensive. In terms of personal finance, the probably the most devastating thing, divorce is close. If you want to get ahead financially, stay married, or at least don't have an ugly divorce. But overall, far and away, medical problems are what crush people's financial health. So make sure you've got some insurance, but do it smartly. Anyway, till next week.